Module 10, Sustainable Capital Strategy, Long-Term Funding Planning and Fundraising Ethics. 1. Principles of Sustainable Capital Strategy. Sustainable capital strategy ensures that funds are deployed to generate long-term value rather than short-term gains. Strategic alignment. Integrating fundraising with the business's vision, mission, and long-term growth plans. Capital efficiency. Optimizing fund allocation to maximize returns while minimizing waste. Diversified funding mix. Combining equity, debt, grants, alternative financing, and strategic partnerships to spread risk. Scenario planning. Preparing for market volatility, cash flow fluctuations, and unforeseen challenges. You will understand that sustainability in capital strategy requires foresight, disciplined execution, and continuous adaptation. 2. Long-term funding. Planning. Long-term funding planning involves creating a roadmap for current and future capital requirements, capital forecasting, estimating future funding needs based on growth projections, operational plans, and market trends, funding timelines, scheduling rounds of funding strategically to minimize dilution and maximize valuation, stakeholder mapping, identifying potential investors, lenders, and strategic partners aligned with long-term objectives. Contingency planning, maintaining reserves, emergency funds, and access to bridge financing to navigate unexpected disruptions. This section highlights that proactive planning reduces reliance on reactive fundraising and ensures continuous operational stability. 3. Governance and ethical fundraising. Ethical considerations and robust governance are critical for maintaining investor trust, legal compliance, and corporate reputation. Transparency, clear communication of fund usage, financial performance, and risks. Accountability, implementing checks, approvals, and audit trails to prevent misuse or mismanagement of funds. Compliance, adhering to local and international regulations, reporting standards, and industry best practices. Fair investor treatment, ensuring equitable access, disclosure of risks, and respect for contractual obligations. You will learn that ethical fundraising enhances long-term credibility, attracts repeat investment, and reduces legal and reputational risk. 4. Performance measurement and continuous improvement. Sustainable capital strategy requires ongoing evaluation and adaptation. Financial metrics, return on investment, internal rate of return, cash conversion cycles, profitability ratios, and funding efficiency. Operational metrics, resource utilization, productivity, and project milestone achievement. Strategic metrics, market share growth, competitive positioning, and innovation outcomes. Investor feedback, incorporating insights from investors to refine fundraising strategies and business operations. This section emphasizes a feedback loop where performance evaluation informs capital strategy adjustments for sustained growth. 5. Integration with corporate strategy. Capital strategy must be fully integrated with overall corporate strategy. Strategic alignment, ensuring that fundraising supports product development, market expansion, technological innovation, and human capital growth. Risk-adjusted growth, balancing aggressive expansion with financial prudence and risk mitigation. Investor relations, building long-term partnerships through transparent communication, performance reporting, and mutual value creation. Sustainability goals, integrating environmental, social, and governance (ESG) objectives into funding and operational decisions. You will understand that capital strategy is not isolated but a central component of sustainable business growth. 6. Learning outcomes of Module 10. By the end of Module 10, you will be able to develop a sustainable capital strategy aligned with long-term business objectives, create long-term funding plans with timelines, forecasting, and contingency measures, implement governance structures and ethical frameworks for fundraising, measure and evaluate fund utilization performance for continuous improvement, integrate capital management strategies with corporate strategy and ESG objectives,